Well, for more analysis on China's economic performance in 2018 and what lies ahead this year, I'm joined by Yan Wang, live from Montreal. He's the Chief Emerging Markets and China Strategist at Alpine Macro. Welcome to the show.
Pleasure to be here.
So what do you see as the key takeaways from this latest data?
I believe, obviously, the economy has slowed, has continued to slow. There's very little sign that the economy is picking up, even though the authorities have been trying to push the economy. I believe there's a combination of external factor and also domestic factor. I think most likely policymakers will have to do a bit more to boost the economy. Overall, I think we see disappointing economic data, but I don't believe 6% GDP growth, or let's say 6.4% GDP growth is such a terrible number, because the size of the Chinese economy has become so much bigger than, let's say, a few years ago. So the impact on global growth is still pretty significant.
Now, we know that the economy is set to slow down further. So which sectors have felt the most impact so far?
So far, I believe two things have been the main reasons why the Chinese economy has been slowing down. One is obviously we see there's the external pressure. The trade war tension is really having an impact on Chinese exports. On the other hand, I believe in the first half of last year, overall policy setting in China was too tight. So then obviously since the middle of last year, they were trying to boost the economy, but the inertia continued to impact growth. So I believe the combination of growth slowdown in external demand and also amplified by the trade tension, but also on the other hand, if you look at Chinese public sector capital spending, fiscal thrust, infrastructure spending, they were very weak last year. So I believe these are the reasons why growth has been slowing down. And this is where if I see growth to pick up, I would expect to pick up in infrastructure spending particularly.
Okay, so how is the slowdown then affecting everyday life for Chinese people as well as small businesses?
Well, people don't really have a tangible feeling, let's say, whether growth is 6.4% or 6.2%. I think the tangible feeling that people will have is whether the economy have deflation tendency, or how the corporate profits are doing, how the labor market will be. So I think overall, that will be where you see people will feel the impact of growth. So I think the growth is, let's say, 6%, 6.4%, as I said, is still a pretty impressive number, but given the size of the Chinese economy. But the fact is, now we are seeing corporate sector profitability is falling, the deflationary pressure is coming back, and also the labor market also kind of softening. So if growth improves, I would expect people will feel more confident as these indicators improve.
Now, in a recent speech to senior Chinese officials, President Xi said that the economy is generally in good shape while facing profound and complicated international and domestic challenges. So talk about some of the government's measures to really try and shore up the economy and how effective they've been so far.
So far, since middle of last year, they have been trying to lower interest rates. They have been allowing the RMB to weaken a little bit. They have been encouraging banks or financial institutions to extend credit to small private enterprises. So these measures, I think, take time to filter through into the economy. Into the new year, I would expect them to continue to do that. But also, on the other hand, from more structural point of view, they have been trying to cut taxes. They have been trying to cut fees for enterprises. But also, I think most important thing is they will have to allow local governments to ramp up infrastructure spending, and this is where precisely they are trying to do. Since the beginning of this year, they have been approving a huge amount of railway projects, and they have also allowed local governments to issue a significant amount of local government debt to build infrastructure. So I believe these are the major areas that we would expect growth to pick up.
And just quickly, we know that President Xi also said that it's inevitable to come across challenges when you're pushing ahead with supply-side structural reform. What sort of challenges, and how is the government dealing with them?
In my opinion, I think over the past couple of years, the supply-side reform, the focus has been trying to delever the economy. and which is probably makes sense from big picture point of view. But if your economy has been slowing down, the most effective way to delever the economy is actually trying to boost nominal growth. So I believe the structural efforts that they have been put in place over the past couple of years to control pollution, to control leverage, I think that they will have to give way to the renewed downward pressure on cyclical growth. So I think this is how do they manage the balance between promoting long-term sustainability versus short-term growth deceleration. I think that will be a key challenge for not only for China, but also for all policymakers around the world.
All right, thank you so much. Yan Wang there, Chief Emerging Markets and China Strategist at Alpine Macro.